You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. You know what's going on in the world of volatility? Well, let's find out together, shall we? Because it is time, once again, for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which so many of you are downloading and streaming and subscribing these days. Keep it up. Keep driving up the bandwidth bills. There's more where that came from in terms of bandwidth. So, good problem to have. Of course, if you like what you hear this show or anything else, throw a like, a star, a comment, whatever your platform lets you do. All of that stuff in aggregate does help new people continue to discover the content, which, of course, helps everything grow out there. That is the engine that drives all of this. So if you like what you hear, keep doing that. It does help. And then, of course, if you want to go above and beyond, you want to join us, let's say, after Vol Views for a little bit of options oddities. Maybe you also want to join us earlier this week. You like talking vol, you're listening to this show. We just had Scott Nations on the old Pro Q&A hot seat, tackling all of your volatility questions. So if you like talking vol, man, we had Mark on a couple weeks ago. It's just been this Vol-palooza on the Pro Q&A hot seat lately. So you should be checking it out. The optionsinsider.com/pro is the place to go to learn more as we go around the horn and see who's joining us on this fine Vol Friday. First, let's go out to the southern volatility mecca known as Austin, where we are joined once again by the greasiest meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, how go things in the southern volatility mecca this fine Vol Friday, sir?
Well, we got the S&P 5000 rallying up about 0.4%. It's the day that ends in wine. Markets are up.
The S&P 5000. I see what you did there, sir. I see what you did there. Yeah, crazy. We had one of our, I forgot who it was, one of our pro members in the chat yesterday pointed out how he remembered S&P hitting 666 sometime during the 2008
it was March 9th.
Yeah.
March 9th, it bottomed at 666.
So, man, we've come a long way. 666 to 5,000. Yeah. Crazy town. We'll get into all of that fun. And joining us to help break down all this volatility fun is Steve SOSNICK, the chief options strategist over there at IB. Steve, welcome back to Vol Views on this fine Vol Friday, sir.
Thank you so much, Mark. You know, I always enjoyed having a chance to visit with you guys, and so fire away.
All right, let's get to it then. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a vol trading and trending and analysis and all sorts of fun perspectives. And as Mark alluded to, we are in new rarefied air S&P north of 5,000 now for the first time ever. So we're going to get into all that fun in a second. But before we get there, Steve, the last time you joined us on Vol Views was all the way back on August 4th of last year. So a lot's happened there. Of course, we still are new in this crazy, wild new year that is 2024. So we're kicking off this new year with all of our first-time guests back on the network, giving them a chance to look back and tell us what really resonated from their perspectives from the vol market in 2023. So, Steve, if I ask you that question, when you look back at the mad, tumultuous world that was vol in 2023, what really stands out to you, sir?
I think what stands out is the lack of tumultuousness. Short of the banking crisis that wasn't in March, and the fall that we had from August through October, and then the turnaround. There really wasn't a lot of volatility. We spent the year at very, very low levels of volatility. A lot of that I've come to realize can be attributed to the very low level of correlation in the market, which has a depressing effect on index volatility specifically. And so while there are pockets of volatility out there, the one thing that keeps coming back to me is I think the one thing we have to fear is the lack of fear itself.
Somehow I knew you were going to go there. You're right. We had a decent range for vol last year, exactly 19 points, which is kind of weird. But you're right. Most of that came in the contagion fear period of March when we got up to briefly north of 30. I believe the high for last year was 30.81. And that was about all she wrote for the upside on vol for at least the highs. We never really kissed 30 again. Played around with 20 in that range a few times, but 30 pretty much one and done for last year. So you're right. Intriguing stuff as we look forward now to what's popping off this week in the mad vol world. And again, we are north of that magical, mythical 5,000 level. Doesn't seem like it was that long ago, listeners. In fact, it was heading into Halloween and of course, the Fed announcement back in early November, where we were threatening 4,100 in the wrong direction. Now, here we are now, breaking through 5,900 handles to the upside from there. So, yeah, we're just in some rarefied air. Of course, we're in a new era pretty much entirely. We're in a new era where names like Meta can put on 20% overnight. Names like ARM can move 50% overnight. I mean, we're in bonkers town. Technical term, you can look it up if you like, listeners. So right now, come in and start the show. S&P feeling its oats, up about 20 handles, up about 0.4%. The Dow is still the laggard, off about 0.2%. And the NASDAQ just feeling all sorts of optimism, up a little over 1, about 1.15%. Of course, not to be outdone, our old friend small caps, Russell 2000, taking the bit in its teeth. They say, you know what, S&P 5,000, take this, up 1.3, almost 1.4%. in small caps land. So they've had a good couple of days out there in small caps land as well. All that a long way around to saying vol, as we kicked off the show, down a bit from where it was this time last week. Now, probably not down as much as you might think. We're talking about all-time highs. So a lot of you might assume, man, vol just got annihilated over the course of the past week. And that's not really the case. We've been moving upward with some velocity. When that happens, vol doesn't always come off the board maybe as fast as you might think. VIX, when we kicked off the show, was at about a 1280. It puts it down a little over a point, about 1.2 points on the show, coming off a little bit more, of course, as the show has commenced. So I'm sure we'll have an interesting number to discuss at the end of the show, but that's what the crystal ball is for, listeners. VVIX at an 85, so actually up a point on the week. Again, all this kind of upside we're seeing, some of it's kind of aggressive. So when you see that, vol tends to not maybe come off as aggressively as you might think. We've been talking for a while about how maybe 13 and right below 13 seems to be a decent little support level for vol around here. It doesn't seem like it can get too much lower before it tends to pop a bit again. Is that going to be the case again right now? Is past going to be prologue, or are we going to continue to blow through all these levels to the downside here? And vol is just done, at least until, who knows, next election cycle, next earnings cycle, whatever. Pick your catalyst of choice is going to get vol kicked into high gear again. Let's go around the horn. Let's go out to the land of Austin now. Mr. Meatball, sir, obviously an interesting week out there, a historic week, at least right now. What's been catching your eye out there, sir?
Yeah, I mean, we're through 5,000. The S&P is at an all-time high, but it's really been the story of the chips, right? Like ARM, NVIDIA, SMCI, AMD to a lesser extent, AMAT, Applied Materials. They're all blowing higher. We're actually, I'm surprised there's not an AI chip index. One that somebody's built yet at this point with the way these things are flying around. But that's been the story. It's been, we've reached 5,000 on, we've got 10 stocks doing all of the heavy lifting. Because when you look at the equal weight S&P, it really hasn't done very much. So right now, MGK, which is the mega cap, Vanguard mega cap growth ETF. So I believe it's all companies worth what, $250 million or more, or $250 billion or more, something like that. Something ginormous. It is outperforming every major index by a wide margin since the beginning of the year. So to put that in perspective, since December 28th, let me get SPX in. Since December 28th, the S&P 500 is up 4.9%. The Qs, right, they're up 6.2%. The Russell 2000 is down 2.5%. Now, the mega cap names, what are supposed to be the stable names, the names that are trustworthy and this and that, it's up 8.63% in a month. Essentially since the beginning of the year, 8.6%, just a massive move out of that ETF. And over that period of time, the S&P equal weight is up 0.17%. So it just kind of goes to show you how narrow this rally has been and what companies are doing all of the heavy lifting.
Yeah, speaking of those different segments of the S&P, I mentioned we had Scott Nations on the Pro Q&A on Tuesday, and he brought up an interesting nugget, an index we never really talk about on this network, the S&P Low Volatility Index. Are you familiar with this, Mark?
I've heard of it. I haven't looked at it in I think I had a conversation with probably you about it and Scott on this show maybe 2 or 3 years ago.
Yeah,
something
it's
like
effectively
that.
like you could call it the boring OEX if you want. It's the 100 least volatile stocks in the SPX. That's what it is. So you could call snooze fest OEX. That's pretty much what it is. That was actually down last year. So all these different segments of the S&P, you take the lowest vol segment of the SPX, it actually lost money last year, a year when all the indices were soaring to high heaven. If you own that, you actually lost money. Again, that kind of just backs up how stratified this market is right now and how so much of these just parabolic upside returns are really being carried on the back of a handful of names. I heard some ridiculous data point this morning that Sam Altman over there, he wants to raise $2, maybe $3 trillion to build up a domestic chip manufacturing. I mean, trillions. They're talking about raising trillions in the private sector. It's just, it's bonkers, but that's kind of where we are. All of that to fund new chips to drive the AI boom, listeners. So again, sometimes people throw out numbers that don't make any sense. We'll see if anyone can raise multiple $1 trillion. But still, these are the kind of numbers people are bandying about, listeners, and not jokingly, which is intriguing times. But check out that S&P Low Vol Index if you want a bit of a chuckle or maybe perhaps a sad violin because it actually lost money last year. Steve, same question for you, sir. Obviously, it's been a volatile week, a historic week by just about any consideration. What's been catching your eye in vol this week?
Well, I mean, I think the interesting thing to me is just how, again, this differential between the handful of stocks and everything else. But even more specifically, it's really just, it's NVIDIA's market. It's NVIDIA and everything else. It's, NVIDIA, if you want to throw in Broadcom, you want to throw in AMD to some extent. certainly ARM. But when you have a call it $1 trillion company that's up 45% year to date, and the year to date is less than 6 weeks old, you have to wonder what is going on here? How much of a mania are we witnessing? And the question I get asked the most is, what if anything causes this to stop? What am the one thing that's very interesting is actually NVIDIA is not a parabolic move, because I'm highly suspicious always when I see parabolic moves, because that means somebody is really in some pain. In this case, it's actually a linear move. It's just, at a slope that I can't ever recall seeing, because it's just sort of relentless. I think, to me, the stakes really get raised ahead of NVIDIA's earnings, which is on February 21st, because it becomes very tricky as to wonder what is priced into this stock. On the other hand, when you look at what happened last week with earnings, Google missed by Google beat on all its major metrics and missed its search metric by a hair, and that was enough to punish the stock 6%. Microsoft beat on every metric, and it didn't move the needle much. Now it's since recovered again and is now the biggest company ever, literally. But then what we saw from Meta was truly astounding, because it beat on every metric and then some, and it added 20%. Now, to put in perspective, remember in 1999 when we had, which is really the last sort of mania like this that I can remember, Cisco was the stock, and that was really the NVIDIA of its day, the picks and shovels of the internet gold rush, as it were. Well, it wasn't until 2021 or 22, I believe, that they finally got back to their 1999 high. And Cisco right now is certainly a huge company. It's about $200 billion. But to put things into perspective, Meta added $200 billion in market cap a week ago today. So Meta added a Cisco a week ago today. That just shows you how insane these numbers have gotten, and how the sort of the lack of concern that we see with all this, just how this is what I've been calling weaponized FOMO, has taken root. And to me, FOMO is as much greed as it is fear, even though literally the first initial in FOMO is fear. And so, we've shifted almost completely to greed without fear. And again, that's the part that gets me as someone in the volatility space, because, the skews we're seeing are flat as a pancake. Actually, ahead of earnings, some of these stocks had inverted skews, which was, again, worked for Meta, not necessarily for the others. But these are, may you live in interesting times. And these are very interesting times from a volatility point of view.
Yeah, you're clearly not the first person to draw parallels between 1999 and what we're seeing right now. I was just saying, I think it was yesterday on the network, we used to hear so often back on the floors of the SIBO back in that time frame, someone would come up with any stock name and you would say, what does it do? And they would say, who cares? It's internet. Fast forward, to 2023, 2024, and you say you could just translate that to who cares? It's AI. And that's kind of what we're seeing out there right now. It's the last time, you're right, I've really seen that type of, who cares? It's AI. So, it's intriguing times. I think a lot of our listeners, we tend to speak to obviously a bit of a savvier crowd out there. And they're always a little bit more cautious, a little bit more reticent. They don't always jump on the latest trend, which is why they're also still a little bit reticent about all things zero-day, which is always fascinating to me. They always tend to fade a lot of these big market moves as well. And so they're all kind of looking for maybe where that next shoe is going to drop, looking that gift horse squarely in the mouth. So intriguing stuff afoot. Do you agree with that parallel, listeners? Are we living through yet another 1999? Is NVIDIA a new Cisco on steroids, if you will? A lot of interesting stuff. How many of our listeners were even alive in 1999? I know definitely post-pandemic, it's been a lot of a younger crowd tuning into the world of options out there. So we might be talking ancient history to you folks, but intriguing stuff nonetheless out there. Always good to know your history when it comes to markets. Let's see what's going on out there on the futures front, listeners. And as you might imagine, things are pretty much down across the board. As we come into the start of the show here, we had the Feb future down a little over a point, about 1.3 points from where it was this time last week, and the March future down about exactly a point. That said, we are in that weird cycle again. Of course, it's an election year. As you'll recall, the last time we did this dance, it was back in 2020. And actually it was a little bit earlier in the year, because right about this time of 2020, we were starting to focus on some other things, shall we say, that really took all the headlines away very quickly. That was in early February that started to develop. But in the beginning of the year, in January, we had a lot of people on it. I remember we had Matt from Oratz on this very show, and he was pointing out, man, that October future, that spike around the election that they're pricing in is ridiculous. Everyone came on saying the same thing. They are pricing in way too much juice for the October cycle for the election. Let's just fade that, sell October, buy the months around it. That was all the talk, the term structure. You couldn't get away from it. Then, of course, a month later, other things superseded, and the election ball became a bit of a distant memory out there. But fast forward to another presidential election cycle. And what are we seeing? A slope that is, shall we say, a wee bit reminiscent out there. We're hanging out at, again, like we said, in the cash, a little bit shy of the 13 handle, around 12 3/4 when we kicked off the show. That front future, again, we've been talking about that as well. The Feb future going the way of the dodo pretty soon, so we expect it to start lining up to the cash more, and it is indeed doing that. But it has remained pretty close to the cash for almost the entirety of its, pole position life cycle here, which is kind of an interesting development in and of itself. But you start looking out down the curve, listeners, we've been talking for a while. You can't find a 20 handle, anywhere on the futures curve. Well, that is no longer the case. You go out to, oh, what a surprise, the October cycle, and yeah, we're at about a 20.3 when we kicked off the show. So you're looking at a little bit of curvature, a little bit of slope out there on the volatility surface this week, which is, of course, interesting. I know for a lot of you out there who like to play the old contango trade. It makes things certainly intriguing. Mr. Mark, we'll start with you, sir. What's catching your eye out there in the volatility surface this week?
Yeah, well, it took a week, but we are finally normal. On last Friday I was saying, hey, the curve is trading like it's next Friday, and guess what? The curve is almost exactly the same shape, and we're sitting right at, we're about 0.4 above. I'm interested to see how vol moves. We may mention this on Option Block, but the CPI is the morning of VIX expiration next week, which should make for a fun VIX expiration, I would imagine.
Yeah, that should add some spice to things going up. And are you surprised to see a 20 handle back on the curve, or is this kind of about the time in the chart when you would expect it, sir? I
mean, well, that's the November, and that really hasn't traded yet, so I don't know what's the volume on that future. It's traded 11 contracts, so we're not. Actually, I'm sorry, it hasn't even traded at all yet. So. It's just kind of market makers throwing a price out there and seeing where things trade. My guess is that will remain elevated because of the elections, but that 20 handle probably falls down toward 18.5, 19, something like that.
Are you implying there is some fluff in the November cycle, sir? How dare you?
In the Akinov, yeah, just a little.
How dare you imply such things on this show, sir? Heresy. Steve, same question for you, sir. Anything catching your eye out there in the vol surface this week?
Well, I mean, I think the clear outlier is October futures. Remember, October is the relevant time period for the election because VIX is looking 30 days out. So October would be the period that October VIX futures would be the period that encompasses the event in November. The open interest on the OCC futures right now is 3,326, which is essentially minimal. But this is normal when option market makers know that there's an event coming. There's a boost to the volatility. We used to have, when I was market making, we had an entire model based on how much to increase the volatility of options ahead of earnings and other events. And so, these are what we call the known unknowns. I don't know how the election is going to go, and I defy anybody who's got a lot of clarity on that one. But we do know that this event is coming in November and has the potential for volatility. So what market makers do is play defense in that situation, and best guess is let's put in an extra three points. It's probably more like an extra 2.5 when you allow for contango. Let's put that in and see if that's appropriate, and we'll go from there. But right now, what we're seeing is more, I'm going to say, risk aversion from dealers rather than actual risk aversion from customers.
Well, the numbers are out from OCC and from SIBO for the month of January, listeners. And was January and even December, were they banger months for futures? And the answer is yes, especially January. I mean, look year over year. The end of the year, December, we were threatening 4 million contracts on the future side. Didn't quite get there. We're pretty darn close. It was up about a little over 3.5%. Again, December, not usually a banger period for the vol futures. Getting out to January, though, back north of 4 million, about 4.1 million. That puts it up 22.2% from this time in January of 2023. So a little bit of growth out there, at least year over year in the Jan cycle for the VIX futures. Are you out there slinging VIX futures, listeners? I'm curious. Hit us up. Let us know. You still with the old options? Maybe you're just playing out there in the vol ETPs. Either way, I'm curious. Hit us up. Let us know as we keep on rolling with the show out there into the land of the mothership, the VIX options, listeners. Is it a banger day for VIX options? The answer is yeah. Looking pretty good, actually. The ADV is continuing to move in the wrong direction, down to about 652, down about almost 30,000 contracts on the week. Already past that, though, today, 701,000 contracts on the tape. So a bit of a banger day, blowing through historical levels like 5K. That'll do that, listeners. And before we get to what's been lighting it up out here this week, we got to get to the top positions because finally, for the first time in I've forgotten how many months, we have a change to the 10-0 top 10, all calls all the time, no puts wanted here sign, listeners, because we finally have a put fighting its way into the top 10 size positions in VIX options right now. Which one is it? I guess you got to stay tuned to find out. So don't worry, you don't have to listen too long, listeners. It's coming up pretty quick. But yes, we have one put finally in our top 10. So we are 9-1 for, again, the first time in I cannot remember how long. It's probably close to at least 6 months, if not longer, that we've been naught but calls out here in the vol land. Now, some of that, of course, makes sense structurally. We're hanging out at a 12 to 13. So in that environment, what would you rather do, buy a call or buy a put? Most people are going to lean the call side. But also, it's just been intriguing because we have been talking about a lot of put paper, just none of it in aggregate enough to fight its way, punch its way into the top 10 until this week, listeners. Well, let's get out there. It cost you 210,000 contracts to break into the top 10 in VIX land right now. That's not nothing. Also, about what you'd expect heading into expiration like this. Obviously, a lot of this is going to roll off the board in a few days. So looking heavy heading into expiration. 210, that gets you to the March 47 halves. I love that strike, listeners. Endlessly fascinating to me. Right behind it, number 9. Told you we wouldn't have to wait too long. Our first and only put in the top 10. 210,000 as well, about 500 more than the number 10 spot. Gets us to the Feb 13 puts. Is that what you guessed, listeners? Was that the strike you guessed? Probably. It is the at-the-money strike pretty much right now on the put side there. So intriguing stuff. 210,500 of those for number 9. Number 8, man, we're pretty close at the bottom here. Number 8, 211,000 of the Feb 18. So right back to the upside. Number 7, 217,000 of the Feb 30s. Number 6, 218,000 of the May 47 halves. I just find it endlessly fascinating. So many people are in love with the 47 half strike. Number 5, 235,000 of the Feb 16s. Number 4, 244,000 of the April 20s. Number 3, 275,000 of the March 20s. Numero 2, 350 of the Feb 20s. And you know what number 1 is, listeners. You know what the big size position, the big dog in VIX land is, at least for a few more days. It's our old pal, the Feb 17s. Yeah, we've been looking at these for a while. They opened them back on January 12th, so it's been almost exactly a month. They've had pretty much a full month for runway on these things. And, the saga has not been great. They had a brief moment in the sun. They closed over $1, about About 5 days later, on January 17th, they closed at actually $1.01. And that was about all she wrote for that trade. It's never really looked back. Last night they closed. Obviously, we're coming in to expiration soon. We're nowhere near a 17 handle, so they're not looking great at about 11 cents right now. So again, do the math. I believe they paid 67 cents for these, so not exactly a banger out there right now, listeners. Let's get out to what else we saw going up this week. Today, like we said, about 700,000 contracts on the tape, so a fairly respectable day already. And the day isn't even done. The big dog out there today, the March 20s. Did you have that in your bingo card? I didn't. 78,000 of those for number one listeners, followed by number two, 56,000 of the March 17s. Maybe a little bit of vertical reaction going up out there. Followed by number three, March 23. It's all March all the time, listeners. 52,000 of those. Followed by number four, 41,000 of the Feb 14s. And rounding out the top five today on a fairly active day, 39,000 of the March 14 half puts. Yesterday, 636 on the tape, so we've already beaten yesterday, listeners. 51,000, that was the big dog of the March 18s, followed by number two, 35,000 of the Feb 14 half calls, and 35,000 as well of the Feb 13 puts. So maybe a little bit of a risk reversal / strangle action. Number four, 32,000 of the Feb 13 halves. And rounding out the top five yesterday, 30K, pretty much exactly, of the March 14 half puts. Wednesday, pretty active day, nearly 1 million contracts on the tape, 939,000. The big dog on Wednesday, 56,000 of the March 19 calls. Followed by number two, 50K, pretty much exactly, of the March 30s. Number three, 43,000 of the March 14 half. Man, a lot of March. Everyone's already moving past February. No love for February. Except for number four, 37,000 of the Feb 15s. And then rounding out the top five on a decently active Wednesday, 33,000 of the Feb 13 half puts. Tuesday was the banger day of the week, at least so far. Maybe we'll beat it today. 980,000 contracts on the tape. A lot of that on the heels of the big dog print on Tuesday. Exactly 100,000 listeners. 100,000 of the August 47 halves. Man, I told you, they've been rolling. They just love across the board. March, May, now August. Someone has this fascination with the 40s. You can do the 45s. You can do the 50s. Nope. 47 half. That's where they like to slot in. And that's where they're doing all their paper to the tune of 100,000 of those bad. I'm looking at them right now. They went up just in one big block for 52 cents on Wednesday, listener. So yeah, you like those? Naked, 47. I don't see anything else spread against it. So sometimes there's some thought that these are spreads, 1x3s, 1x5s, but this looks like it's just straight up opening 100,000 lot of the 47 halves for 52 cents. You like that, listeners? Either way, that was a big dog on Tuesday, followed by number two, 56,000 of the April 20s. Number three, 38,000 of the Feb 32s. Number four, 34,000 of the Feb 17s. And rounding out the top five on Tuesday, 32,000 of the Feb 13 puts. Monday, respectable, 687 on the tape. The big dog on Monday, 52,000 of the May 20s, followed by 51,000 of the May 40s. It looks like some vertical action there, followed by 47,000 of the Feb 14 puts, 37,000 for number four, the March 20s. And rounding out the top five, again, a pretty decent week. So surprisingly, ADV came in 31,000 of the Feb 14 calls. Let's go around the horn. We'll start with you, Mr. Meatball, because it's been a pretty dense week, I would say, out there on the VIX options front. A lot of funky prints, including, I love this 100,000 lot of the AUG 47 halves. That may get my vote for my VIX print of the week. But what are your thoughts on those? And anything else catching your eye on the VIX options front this week, sir?
Yeah, well, today looks to be a lot of closing. We are seeing some pretty decent activity on the March 20s and the April 20s. Yesterday they did those August or what day? Yesterday the big trade was a March 18 seller. We also had I don't hate this, Mark. They bought the Feb regular 12.5 put for a nickel 20,000 times on Friday. Actually more than that. Looks like, you know, they went for some decent size on Thursday buying those 12.5s for a nickel. Not a bad little flyer, right? If the market's going to go straight up.
You trying to talk our audience into some more VIX put flyers, sir?
Yeah, it's you know, looks like a lot of activity is moving out to March at that 19 and 20 strike, things like that. And then yes, you have your August. This was unclear whether they were buyers or sellers. It looks like they were. Was it like a 1x5? So they bought the 22s and sold the 47s for a pretty nice credit.
Oh, I do see I do see the 22s going up. Yeah, they didn't go up as a spread. You got to scroll down a bit. You're right. 20,000 by 100. I thought there was some ratio legs to these in the past. So
that's
the 22s for $1.89 versus 100,000 of the 47.5. So yes, listeners, 1 by 5. So they collected a credit.
1 by 5. Well, it's a great trade if the VIX doesn't rally hard. This will do well if kind of time passes and they're able to cover those 47s and end up owning the 22s for free. It's not the worst idea, but if vol does explode, they are not going to be happy. That would be the one thing I would say.
No, if you got a short 5 of the 47.5s, that could come back to bite you. But they have been doing this for a while, though. I thought there was a 1 by 5 ratio out there. March, May, someone has just grokked onto this. They love this spread. Somewhere around the 20 handle against the 47.5s, and they've been doing it for size.
And you had a big Monday. The big trade was a 50,000 lot of the 20-40 call spread.
Yeah, I saw that.
That I like.
I couldn't tell if the 20s weren't openings. I couldn't tell if they were rolling. But why would you be closing the 20s now? That's kind of weird.
I think it was just a call spread. I think it was just a straight call spread. I don't hate that as a hedge. I mean, with VVIX, where is VVIX? With VVIX in the 80s, buying a call or a call spread, especially it's May. I'm sorry, not March. Buying a call spread where the curve is relatively tight, like May has 3.5 months and it's trading below 16. That is not a wide spread. So we get a little bit of a move, and we'll see that middle of the curve could get frothy real quick. You could actually see some theoretical outperformance of volatility. If the market sells off, we could actually see the VIX outperform the spiders if we did get a move.
And looking at it now, it's like they put it up for $1.09, listeners. So you like that? 50,000 times May 2040 for $1.09. I'm curious. Does that intrigue you? Steve, we were talking about a lot of paper out here in VIX options land. Anything catching your eye this week, sir?
Oh, the 47.5 level intrigues me, and the reason it's interesting. I guess I would have picked 50. I don't know why 47.5 also is so obsessive.
Yeah, that cracks me up that they choose that.
I did a couple of. There were 2 anniversaries that I wrote about one last week, one earlier this week, and last week's anniversary was the 1-year anniversary of what I call the debutante ball for zero-dated options. Because when you think about it, no one talked about zero-dated options until February, first week of February of last year, when there was the Wednesday Fed meeting, the Friday jobs numbers, and Thursday we went insane, and people said, "Oh wait, I can buy options that expire without having to expose me to the jobs numbers," and that was really the coming out party, as it were. And then on Monday was the 6-year anniversary of Volmageddon, and so those are the numbers that stick in my head. And 50 was really 50 was the peak. Actually, not on the Volmageddon day. It was actually the day after, which. For those of you who lived through the crash of '87, the worst day was not the crash day itself. It was actually the day after was when it all felt like it was going to come apart, and then it turned around. Same thing here with the Volmageddon story. So I'm guessing people figure that even under the most extreme circumstances, you're not going to get a lasting move above 47.5. If we couldn't do it under those circumstances, it's pretty unlikely we're going to do it now. Remember also, if you are expecting a big volatility move higher, and I think with each passing day of this, again, not parabolic, but straight up move in NVIDIA, the risks grow higher every day. But before Volmageddon, the trading range was really like 9 to 11, basically, on VIX. Whereas here we're more or less call it 12.5, 14.5. So even though it seems like a very low volatility environment, it's not where we were then. And of course, we don't have the crazy ETNs to explode that we did in those days. The XIV, which was a Credit Suisse product, which probably should have told us what was going to come down the pipe with that bank later, unfortunately. But so, that's why I think 47.5 is an interesting number. Again, why not the round number? I don't know, but I think that's where the open interest is tended to accumulate. But even there, while I agree that there could, if we get a real vol pickup, that trade can get very sweaty. The odds of getting a move sustainably through that level are really, really low, which is probably why we see that 1/5 going up.
Yeah, it's hard to believe it's been 6 years since Volmageddon, but you're right. Yeah, 2018, February.
February 6th, 2018.
Yeah, a lot's gone on in the vol market since Feb. We have inverse vol has come back. It's been back for a couple of years and really making a whimper out there. So yeah, a lot to unpack there. Speaking of inverse vol, let's get to the universe of volatility ETPs in the time we have remaining here, listeners, before the crystal ball. SVIX inverse vol, obviously looking pretty good again at a 41 when we kicked off the show, up a little over 2, about 2.3 points. Not exactly a new all-time high, but pretty darn close. I think the all-time high was 41.5, so half a point away. That's pretty much the narrative for SVIX for the better part of the last 6 months, is almost new all-time highs every time we talk about it. So Mark and Mr. Rhodes, who I was just talking with on Twifo yesterday, just loving overwriting the hell out of some upside calls out there. SVIX actually putting up some numbers today, it seems like, which, again, frame of reference, listeners, it doesn't trade a lot, but the ADV is only 3,200. So the fact that there's 5,100 on the tape today, something's going up. Looks like 600 of the 41s and 600 of the 41 halves and 600 of the 39s expiring today. That's weirdly symmetrical paper, all going up today. Looks like 2 of them are closing, and then the 41 halves expiring next week are opening. So maybe they took off a vertical and they rolled them out to the 41 halves. Either way, that's 1,800 contracts right there. Aside from that, not a heck of a lot else. The size position right now in SVIX are the March 45s, 2,300 of those. Let's go out to its sibling product, UVIX. This one's been feeling its downside oats again, 10.5 down almost exactly 2 points. It was 1 point now. It was right around 12.5 on the show this time last week. I know, because I put on a fun UVIX butt fly again. We'll get into all that fun on options oddities a little bit later today, listeners. But today looks like UVIX also putting up some numbers. The ADV is 13,000 right now, which is kind of unchanged. But we are seeing some prints going up out there, including today about 800, the big dog of the 10-half calls expiring today. This is all opening paper, so people playing fast and loose on expiration day with the 10 halves. Again, we're hanging out right at a 10 half, so they're coming in close to the fire. Looks like they were probably selling them for around a dime, 9 cents. So not the sexiest of trades. We get a little bit of a turnaround at the end of the day, a little bit of a vol pop. You might be wearing it on those, but that looks like what they're up to today. That's what's driving the paper. Speaking of driving the paper, we talked a couple of weeks ago about a big print out here in UVIX. It was 20,700 of the April 12s, as you'll recall, listeners. Those are still open. That is the size position by a country mile in UVIX. Nothing else really close to it. You could probably intuit from what I just said that not exactly looking great. A week ago, they were in the money. Now that is all gone again. They bought them for, as I recall, about $2.70. And as of last night, they had closed around $2, probably trading even below that now. So again, not looking great. They got some time. They have until April. I think we did a little fun poll question. What would you rather have, the 17s in Feb and VIX, or the April 12s for 270 in UVIX? I don't think either of you really wanted any of them, but I think you probably went the VIX route. We all know how those are going as well. And also our buddy Mr. VIXologist's favorite product, aka UVXY, at about a 7 even when we kicked off the show, down about a point from this time last week. Putting up 57,000 contracts today. That's actually kind of light because the ADV is 103,000 right now. That's still down 5,000, so not a ton of paper there. The big dog in UVXY right now, 18,000 of the March 8 calls. So that's kind of interesting given the fact that we're hanging out at a 7 right now. And let's throw in VXX in there as well. Why not? Because we haven't talked about it in quite some time. VXX was at about a 1390 when we kicked off the show. It's still pretty much right about there. That puts it down a little over a point, about 1.1 points on the week. The ADV is at about 68,000. That's down about 3,000 this time last week. And today we're seeing about 33,000 contracts on the tape. So roughly halfway there. We'll see if the rest of the day delivers the goods. In terms of size positions in VXX right now, it's about 30,000 of the March 14 puts. Again, the at the money put strike. So interesting stuff. We haven't talked about VXX in a while. You out there slinging it again, listeners? Or have you kind of maybe lured some of the other, dare I say it, sexier things for the erosion trade, like your UVIXs and your UVXYs and all that kind of fun? I'm curious. Might be a fun poll question as well. Steve, I just broke down kind of the universe of vol ETPs, at least the big ones that a lot of our audience likes to trade. Anything catching your eye out there in those? And maybe also to add to that conversation, maybe there's a vol ETP I didn't put in there that attracts your eye more, in which case have at it, sir.
Well, I think you should know by now, I'm not the hugest fan of vol ETPs. I tend to prefer to trade the underlying rather than use an ETF or some other wrapper for it. I think what's interesting is the guy buying the calls in UVXY right now, because that to me is just another sign that somebody thinks something can break. And I do think, as I say, if I have to put like a sort of a little circle on the calendar, it would be the period not ahead of expiration, be the week after expiration, because something's got to give when NVIDIA reports earnings. Either it's just going to knock it out of the park again, and what the heck, we get another 20 or 30%, because what's the difference? Or this thing comes back to earth in a little bit because the expectations are so outlandish. So I think it's interesting that even through some of the ETPs, we're seeing some robust hedging activity. And that, the people betting against vol are certainly, it's working for them, but they're not going crazy doing so, which, mitigates against that spurious Volmageddon type of move. It just sort of means that, if we're going to move because of other things, real, sort of real world things, not out of the blue things.
And Mr. Meatball, anything catching your eye in the world of vol ETPs this week?
Let's see how the volume looks today, because that's always fun. UVIX looks like it's going to maybe break 10 this week. Believe it or not a lot of volume on the stuff expiring there today. UVXY, boy, it's getting ready to reverse split again, isn't it? You got some activities around the 7 and 7.5s. 2,800 to the 7 puts are 3 cents mark. If they implode vol, those might not be a bad little trade. What do you think?
Are you
Mark?
First you're talking the 12 half puts for a nickel. And now what was your other one you wanted?
I am trying to get you in some lottos, buddy.
You just love dangling these.
And by the way, can I please request, when you're discussing Jim Carroll, can you not call him our buddy? Because that implies I like him too.
He's your nemesis in life. I understand this. Yes.
He is.
He is the captain of the UVX. He insists he is not the captain of the. But every time he tries to gum up one of our polls, all of a sudden UVXY spikes through the roof because all of his legion of UVXY devotees come pouring in and saying it's the best thing since sliced bread. So yeah, that guy knows where he stands with me. Speaking of where we stand, you folks, I always love our listeners. I get to a little bit of you now, a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Folks, you folks take the reins, your questions, your comments, all sorts of insights. Also, our live chat popping. A lot of fun stuff going on out there today. A lot of folks derailed by the talk of the S&P low vol index. Yeah, I get it. It's kind of fascinating and depressing depending on how you look at it. A lot of people asking, how you make money off this thing. Well, I guess the spoiler alert, don't buy it over the course of the past year. It hasn't exactly been the best trade. But as you can imagine, we haven't talked about it almost ever on this network. There's a reason. It is not the sexiest thing. I did just pull it up while we were talking. There are a bunch of ways you can look at it. There's the ticker SPLV. I think someone mentioned it in the chat as well. I think, was it Option God mentioned? Yeah, there is an ETF on it, and that is optionable. So if you did want to sling something, I just pulled it up right now. As you might imagine, it's not exactly the sexiest thing in the world. The ADV is a whopping 54. That said, there is a size position on out there. There's 11,066 of the March 63s are open in SPLV. That's an enormous print for this name. And also, weirdly enough, it's pretty much exactly the at the money strike. SPLV 6283 right now, listeners. And also weird, they put it on back in August, or excuse me, put it on back in October. So, yeah, they put on the at the money strike. Looks like they bought them for around 60 to 65 cents back on October 17th. So, back when SPLV was 59.30. So, there you go. 59.30, we're at a 63 roughly right now. So, again, that kind of speaks to how maybe it isn't the most scintillating of names. Certainly an interesting one to be buying upside calls in. I'm not sure if that would be the trade I would go for, but someone has 12,000 of these bad boys open. I know, Mark, we were joking before about this being kind of the boring OEX, but it's kind of what it is. Have you ever even looked at these things? Our chat is kind of obsessed with it now. Would you ever even consider trading this thing?
I mean, if the low volatility index has high volatility, there's got to be an opportunity to take some dollars there, wouldn't you think?
That's a contradiction in terms, sir. I don't think we're going to see that. I looked at.
Yeah, I'm gonna examine this thing for sure.
I saw the big holding is McDonald's in it right now, so that gives you some sense of what's popping out there. Steve, is this one you've come across in all of your option strategizing at IB over the years?
You know, it has, just because I have occasional conversations with Scott Nations, and he brings up his oddball names. I hadn't really thought too much about it, and I think, like many of the listeners, I'm suddenly more intrigued than I had been because that's just it's out there. The one out there one that I tend to look at is a SIBO index about correlation, COR1M, which is the SIBO 1 month. It's a SIBO 1 month implied correlation index. And that actually has some, I'm not going to say some predictive ability, but it can at turning points with VIX, because it measures roughly the same time period, that 1 month out. And when you look at, when I chart the two of those indices together, I find that can explain why, the low correlations explain to some extent why VIX is mired where it is. Because again, if you have, if you have some stocks moving up and some stocks moving down in a broad index, they can balance each other out. It hasn't exactly balanced each other out completely because the index is going up. But in terms of this bifurcated market that we have, that does tend to depress vol. And you'll see the correlations are sort of, muddling along the same way that VIX is. And I do think there's some explanatory factor in there.
Speaking of explanatory factors, we also have Age Delaquarius in our chat saying he's doing research on presidential election years and vol. It's so hard to separate out the 2008 and 2020 elections from the great financial crisis and COVID, but it looks like other election years have been relatively low vol years. Yeah, you're right. The recent data points are so completely obscured by other external factors. It makes it really hard to get to the meat. Like 2020, there were so many other things going on. And again, as you point out, in 2008, you're right. Those are kind of some outlier years. That might be a good little bit of research question. Maybe the next time we have Dr. VIX on or some others, I'll task them with crunching some of the data for the presidential election cycles and vol. You're right, we're going to have to do some finagling with 2008 and 2020, but some intriguing nuggets in there. Again, looking at the term structure right now, that was my first thought. I was like, wow, this looks exactly like what we were looking at. Not the same relative level, obviously, but at the end of the day, slope-wise, it reminds me very much of what we saw in the beginning of 2020. Then, of course, other factors intervened, and we went on a wild roller coaster ride that you could argue we are still in. And speaking of things we're still in, we're still on with the show. It's time to get to the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the Crystal Ball, the portion of the show where we get weird, we get wild, a little bit whimsical. On the show last week, it was myself and the Meatball and our buddy Noel, and I was at a 13 double, so not looking great. We're at about a 1285 or so. Let me just pull up on my other screen. 12, actually a little bit shy of 12, about 1278. So kind of unched from where we were at the beginning of the show. We were flirting right around 1280, 1275 at the start of the show, and we're pretty much right back there again. So spoiler alert, no joy for me. The Meatball, you know, with his palindromic nonsense, no love for him, 1441. Noel was at a 1290 though. And since I said 1284 on my first print, you know what? I'm going to give him a bullseye because I'm a nice guy to the guests. And also because he deserves it. That's a pretty good prognostication there. So congratulations to our guest, Noel. You've earned yourself a return visit now with your crystal ball bullseye. Steve, that also puts you in the unenviable position of going first since you are our guest this week. You get to celebrate with our guest last week. Celebrate his victory by going first this week, sir. What are you feeling for Vol this time next week?
Yikes. I'm going to go with 1340, I think. I think we get a little bit of a nervousness creeping in, between an expiration week and again ahead of what I'm going to keep harping on is the all-important NVIDIA earnings. You know,
I'm also going to throw you a curveball, Steve, because you didn't join us at the end of the year last year. I gave everyone else on the network a chance to predict where Vol will close at the end of the year. You're getting a bonus. You get a month under your belt now having to pick. But if you had to guess the closing print for VIX at the end of this year, sir, what are you going to say?
17 and a quarter.
Ooh, look at you. I kind of like that. I get what you're putting down there. A little bit of froth left over maybe from the election, maybe something else. Who knows? 17 and a quarter. We'll put Steve down in our list there. All right, next closest was me, even though I wasn't that close. So I guess I will go next. Yeah, you know, I made an argument for maybe Vol staying a little bit close to where it was last year, off slightly. Obviously, that did not come to pass. I don't know if I see a lot of argument for a lot of additional juice, unfortunately, even though I wouldn't mind it. So I will say 1 point exactly below my last week prediction. I'm going to say 1255. And Mr. Meatball, I'm going to guess you're going to be at maybe a 1221 or a 1331. What are you feeling?
You know what? I'm feeling a 1331.
Ooh, a little bit juicy. A little bit frothy out there. All right, so actually, and you're totally stepping all over Steve as well. So he gets a whopping 0.09.
Oh, should I go to 1441?
No, it's fine. It's like the person on The Price is Right who does $1 over the last guy.
Exactly.
Yeah.
So he's the closest without going over. There we go. So that's our market for next week, listeners. Steve on the upside at a 1340. Meatball right behind him at a 1331. And myself bringing up the bottom, a rare low vol pick for me at 1255. All right, listeners, that music means we come to the end of Volatility Views for this week. That will also be the end of our broadcast week for all of you on the on-demand side. Thank you for joining us this week. If you don't want your broadcast week to end, get on over there right now, theoptionsinsider.com/pro. I'll be back in a little bit to break down a wild week on the unusual activity front. What trades are lighting up our tape? Well, how did my UVIX put fly work out? All sorts of fun. Tune into Options Oddities in a little bit to find out. Theoptionsinsider.com/pro is the place to go to learn more. And Mr. Steve, if folks want to learn more about Vol in the land of IB, where should they go? What should they do?
Well, I publish daily. Today's piece, by the way, was why we can thank zero-dated options for a lot of this year's rally. You can find my stuff at IBKR Campus or look up Interactive Brokers IBKR Traders Insight. And you can find the stuff that I write. I try to do something pretty much almost every day, except when I'm otherwise engaged. You can also follow me on Twitter, which I'd love. You can also follow me on LinkedIn, which I welcome as well.
Why don't you tell everybody your Twitter handle?
Oh, that would be helpful. Yes, at Steve SOSNICK. Thank you, Mark.
Yeah, you're welcome.
You beat me to it, Mark.
I'm going to follow you right now.
I was just about to say, tell them your handle, but you beat me to it. Well done.
Yeah.
So give him a follow on Twitter at Steve
SOSNICK. SOSNICK.
There you go. Well
there
done.
You have it.
folks want to get a taste of the pit on Twitter or anywhere else, where should they go? What should they do?
Yeah, go to optionpit.com. My Twitter handle's @optionpit, and I'm putting out volatility content and market commentary just about every day. Totally worth your time. Come and check it out.
Check them out, optionpit.com. I was looking at what our pro members have in store for next week. A lot of 12 handles in the chat for the crystal ball. Oh, the Queen's at a 13.2. I see some Option God's at a 14 handle. Ooh, so a few folks taking some flyers. Most of them seem like they're coming in around the range we were, somewhere in the mid to high 12 handle. If you want to play along, listeners, you listen on demand after the fact, get it in at Options on your favorite social media platform. Questions at theoptionsinsider.com. However you get the show, send it in when you're listening, and you too can be entered to win fabulous prizes. That's going to do it for us on the on-demand side. Like I said, back again in a little bit for Options Oddities. Back again on Monday for the old option block all the way through to next Friday, another episode. Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.